Now that we've rounded the corner in January, all questions of turning past the SEC, past the Democratic and Republican primaries, and past what's going on in the Middle East, even past earnings, which are still ongoing. Big question is, where's this market going? In this video, I want to go through the four corners of the market, take the 40,000-foot view, and show you what I see. Let's get started. All right, everybody. So this week, what I thought I'd do is I would start off with a four corners update. And then at the end of this, I want to show you something else that I pulled. I pulled a couple of scans, and we're going to cross them together, and it's going to have something to do with SPY. So hang on a bit. So here we go. This is SPY. Now, what I did here was I pulled the chart, and I added a couple of things to it. So you've got a chart of SPY, as you can see down here, that we hit this 410 low, and that was back in October. And so since October, we've had a really nice run up to even new highs as of right now on the screen. What we did was we added Fibonacci on this chart. We added, this is candlestick, so this is the actual chart itself. But you're also seeing trends. You're seeing a blue line, which is the 30 to 60-day options implied volatility. All of this together gives me what I like to call the all-in-one chart. And the all-in-one chart's telling me right now that the trend is up for SPY. We are on the high side of the Fibonacci area. In fact, we're really close to the highs you see right now, 484. Again, if we were to pull back, this is the median pullback, which is 447. All the way down here is where the beginning of the uptrend began. All right, that's pretty much the lows on the chart, which is at 410. Our target on SPY is above the round number of 500. In fact, it's up around 510, and that pushes out into really more towards the end of February to maybe March. That's what we see for SPY. Moving forward, this is TLT. Again, I describe TLT. It's the bond ETF. It's the 20-year Treasury bond ETF. And as you can see over here on the far left-hand side, back in September of last year, we were trading in the high 90s. We went down as low as 82. We bounced off of 82 in the middle of October and started to make a run up as interest rates go down. So this chart is inverse of interest rates. As it goes up, rates go down. As it goes down, rates go back up. We most recently, by about the end of December, hit a high of 150. 100.5, we pulled back from that and are currently bouncing off of the top line support around 93.74. Now, if this trend holds true, and when you think about it, it should, because again, if we're talking rate cuts, and rate cuts do happen, that's going to have a positive effect on TLT. And so we should see this kind of go back up again. We got a target on this one of 105. Now, it's a question of really when do these rate cuts actually occur? And so that's something to keep in mind as well. Moving on, take a look at UUP. Now, UUP's got you see a lot of this blue bouncing. That's because the options are not as liquid in UUP. This is the double dollar index, as they would be in, say, the SPY and TLT. Therefore, I tend to ignore this. In fact, I don't really trade UUP, the double dollar index. And the reason I don't trade it is because, I mean, it's an ETF, but it's a double. It's like it's a power shares ETF. So it moves at twice the speed of the US dollar, but I use it as a measurement. And when I see this going up, that means that stocks could be under pressure. When I see it going down, that's actually good for stocks. And it has done that. The trends are down on the US dollar. We haven't seen a downtrend on the US dollar since maybe right after COVID. And then we saw the dollar kind of drop as the government was flushing money into the hands of US taxpayers. And so we've gone through from a high of 30 down to a low of 26.95. Now, we have since then bounced, and we're trading right around the 27.70 area. If this trend stays intact, we should see lower lows, maybe come back down to 26. All right, stocks, bonds, currencies, commodities. First of two commodities I'm looking at is USO. This is United States oil. This has not participated in the uptrend and really has actually had a downtrend since October. Now, seasonally, oil tends to go lower into the winter, and that's exactly what's happening. We've seen 82.90 become 64.25. We've seen a bit of a bounce here. Expect some resistance above 71. We see if the downtrend continues, target 61, but the seasonality for oil changes to bullish about this time next month. So this has to happen inside of 30 days. All right, finally, in the area of four corners, we're going to look at chart number 5, which is another commodity. It's gold. Gold hit a low of 168.84 back in October. Since then, had a nice run up past the mids at 180 to the highs of 192.62. That was right about the end of December. Since then, we've had a slight pullback. And we're kind of sitting now below the 187 half mark. So where do we go from here? Well, we see some really good support down here around 183.54. After that, 180 is a round number support. But if we hold support, we're looking for GLD to have a target later in the spring here of perhaps 200. All right. Finally, and I said I would bring this up, and that is to take a look at. Oh, let me look at Bitcoin. I had a Bitcoin in there at the last point because we're seeing a lot of stuff going on with Bitcoin today. So since the SEC approval, Bitcoin hit a high of 49,000. All right up here. It's been dropping. It's dropped below 40 as of earlier today. I had 39. So we have round number support at 40. We've already gone through that. I have a Fibonacci support level that you don't see on here at around 39,000. All right, so 39,000. And then if we break that, I've got the next area of support at 32. We have a short-term BTC target of 52,000. Adding all this up, let's talk about the SPY one more time. So if I were looking at stocks in the SPY, if the trend is up in SPY, what stocks are most likely to go up? And then what call options might be the best ones to look at for those of you that like to trade calls? Well, what I did was I took the cheap IV list, all right, and I ran the cheap IV, and I see Wells Fargo on here, Fastenal, PPG. This is a QQQ. This is the NASDAQ 100 ETF. Interactive Brokers on here, and all the way down at the bottom is Bank of America. What I did was I took all 10 of these, and I said, well, which ones are highly correlated to the SPY? So as you can see here, I ran a correlation list. Here's SPY, and this is WFC, so Wells Fargo, and how correlated it is to SPY. Well, over 91%. So I went ahead and highlighted that green check mark. So if I am bullish on SPY, then WFC, if it continues to run, this is the last 50 days correlation I did. And so if correlations are any sign of where things are likely to go, there's no guarantee. But if they are, Wells Fargo looks good. STT was also a 90% correlation. Look at, obviously, QQQM, 98% correlation to SPY. Then you've got SNX, 92%. And all the way down here at the bottom, Bank of America is over 90%. The one that correlates the least is PARR. And I can't for the life of me, off the top of my head, I don't remember what PARR is, but looking at it, I don't want to trade it. If I'm bullish and I want to look at a stock and I want to look at call options that are cheap implied volatility calls, then I'm looking at WSC, STT, QQQM, SNX, and BAC, Bank of America. So that does it for the four corners. All right, folks, there you go. Comments, questions, put them below. Subscribe if you like it. I'll see you next week.